It's Thursday, November 9th, 2023. I want to start out today. I want to apologize. I have a very raspy voice. I took a couple days off, had a nasty sinus infection, and it's been very difficult to speak, but my voice is returning. Hopefully by this weekend, it will be back to normal. So please bear with me today. My voice is raspy. I didn't really feel too bad. It was just this drainage from my sinuses that just really affected my throat, made it just feel very, very raw and inflamed, and really then began to affect my voice. But other than that, I didn't really feel bad or anything, other than just this sinus issue. But it's drying out now. Laid out in the sun for a half hour today and just try to dry it out. And it seems to be getting better. Hopefully by this weekend, I will be back to normal. But a few things I want to discuss today. The first one, Jerome Powell spoke today at a convention, and he said that the Fed is not confident it has done enough to bring inflation down. Markets did not like what he had to say. Dow Jones down 220 today, NASDAQ down 128. Now, a few things I noted here that Jerome Powell said. He said, if it becomes appropriate to tighten policy further, we will not hesitate to do so. He said, we will keep it, we will keep at it till the job is done. Inflation is still well above target and has a long way to go. Markets did not like this. To me, this is just basically saying that the Fed is going to raise rates further. I think that we're going to get, I think we probably will get a hike in December, and I think we will get another hike or multiple hikes in 2024. How can we not when we're nowhere near the 2% inflation target? The Fed must continue to raise rates. I don't see how they cannot. I'm surprised that they haven't already done so. This was interesting. Mortgage rates just plunged. See how much you'd pay for a house at current rates. This on CNBC today. They're trying to make it sound like it's a bargain now. That you should go out and buy a house right now because rates have plunged so much that you should go out and buy a house. Bankrate.com, 30-year fixed mortgage interest rate today, 7.83%. Now, it has fallen 19 basis points over the last week, but 7.83%, I mean, and they're trying to tell you to, like, you better jump in, you better hurry, because this is an opportunity that you only now have to pay 7.83% for a home that is highly overpriced. Be cautious, ladies and gentlemen. Be very, very cautious. Many of these financial channels, are bought and paid for by the large banks and corporations. They want you to buy into these markets. They want you to go buy a house. They want you to go run up your credit cards. They want you to take on more debt. And while they want you to do that, most of you already know, WeWork, once valued at $47 billion, files for bankruptcy. Their stock went down to a nickel. Today it's $1.26. Yet nobody's talking about this, has no effect on the markets, and people still believe that nothing can happen to this economy. You look at a company that was just a couple years ago valued at $47 billion, now filing bankruptcy, and nobody is even talking about it. Here's another one today. Overdue commercial property loans hit 10-year high in U.S. The volume of past due loans in which owners of properties rented to others have missed more than one payment jumped 30%, or $4 billion to $17.7 billion in the 3 months to the end of September. You don't hear anything about what is happening to the commercial real estate industry and the devastation that is going to follow as more and more of these properties go unpaid, as more people, more businesses are not making their payments. Nobody talks about it. So WeWork, commercial real estate, household debt, all this, repossessed cars, 25, 30,000 repos a day. Nobody's talking about this. We just keep hearing that everything's fine, everything's resilient. We got the jobless claims today. 217,000 people file first-time jobless claims. And again, this isn't really a bad number. The Fed is looking for a much bigger number. So I don't see how the Fed is not going to be raising interest rates even more on top of the job numbers, on top of inflation. We're nowhere near the 2%. I think the Fed has no choice here. But again, it's not going to do much when you have a government that is outspending the Fed, that is sending billions upon billions upon billions of dollars to other countries. The hedge today, used vehicle prices record largest maximum drawdown in history. Used vehicle prices just hit the lowest point since March of 2021. So the strikes are over. It is now back to reality. Bankrate.com data shows the average borrower's rates for used cars have surged from around 3.85% in February of 2022 to 7.3% this month. That is nearly double. And this is going to continue to spark an affordability crisis. And this is why you're going to see more and more used cars piling up at the dealership. And now that the strike is over, or the strikes, you're going to see more new cars piling up at the dealership alongside all of the used cars that are piling up. Because here's the problem. You have less people qualified to buy these cars, and you have less people who can just afford these cars. There are going to be less and less people with a job. More people are just going to continue to lose purchasing power because of inflation. So you have a problem here. You have less qualified buyers. You have less people that can go out and buy a car. You have more people losing jobs. So this is going to be a big problem for the auto market, and it's going to be a big problem for the housing market, because in order to buy a house, you have to be able to afford it. In order to buy a house, you have to have a job. And so if you can't afford a house or a car, if you don't have a job, you're not buying these things. Beef prices hit record high as southwestern U.S. recovers from worst dry spell in 1,200 years. Beef prices recently notched $8 per pound, topping a pandemic record of $7.90 a pound, according to the USDA data. The hike is being driven by shrinking cattle supply, because remember last year, the year before, when the ranchers were turning their cattle in and they were turning them in early because they just couldn't afford to feed them. And so now cattle supply is much smaller and the feed cost continues to surge. So surging feed costs and this rainfall that never showed up in the Southwest is really affecting prices here. And when I go to my butcher literally weekly, I'm just blown away with the cost of beef today. If you want good beef, if you want good chicken, you're going to pay a huge price for it. There's just no way around it. Again, with the weather conditions, the drought, feed costs, labor costs, net transportation costs, it's all being added in to what you're paying for hamburger, steak, poultry, you name it. Retailers expect a weaker holiday season. This on the hedge today. For now, consumer and corporate still have access to credit, but it's getting harder and more expensive. Once that dries up, we could see more pain. Think about if the typical American didn't have 8 or 10 credit cards, what this would all look like right now. Retailers have cut 72,000 jobs through October. That's a 258% increase from 2022. So comment down below, what is this holiday season going to look like? Are you going to be spending more for Christmas gifts? Are you going to go out and buy the $200 Christmas tree? Or are you pulling back? I want to know. Comment down below. We all want to know. Are you going to be spending more? Are you going to spend the same as last year? Or are you going to be spending less? What are you going to be cutting out? You're going to be cutting out the presents, the trees, the ornaments, the food. Let us know what you're going to be doing. And I'm going to finish with this last article, the economiccollapse.com. The title, Americans are absolutely drowning in debt, and this really is the worst debt crisis in all of U.S. history. Credit card debt in the U.S. is now a record $1.08 trillion. Credit card balances spiked by $154 billion year over year. Average interest on a credit card, 24.46%, that according to Lending Tree. If you owe, check this out, if you owe $5,000 on a credit card, which the average American does, it will take you 279 monthly payments and $8,124 of interest to pay it off. That is shocking, and this is why so many people are never going to get out of this death spiral of debt. Auto loans in America now have totaled $1.6 trillion. Student loan debt now, $1.77 trillion. Mortgage balances, $12.14 trillion. Overall household debt is now more than $17 trillion. The only way, according to the article, to keep the party going is to borrow even more money. But thanks to higher interest rates, you're not going to be able to purchase as much. Kevin O'Leary said something very, very interesting. He says that we're looking at the downsizing of America. He said a couple years ago, you could get a mortgage at 4.5%. Today, it's 8%. So the size of the house that you're going to buy is going to be 20 to 25% smaller. If you want to buy a car, well, a year ago, it was 5% to borrow. Now it's 8 or 9%. So now you're driving a smaller car or a less expensive car. So you're looking at the downsizing of America, the downsizing of the middle class, the downsizing of the standard of living in America. So as I was able to just kind of take a break for a couple days and just kind of watch the news and watch things continue to escalate in the Middle East, and just watch the banking system continuing to show more and more cracks. As you sit back and watch this stuff, I don't know anybody who can count to 3 does not see danger ahead. There are so many things about to break loose, ladies and gentlemen. There are so many things that are about to break, and the average person in this country is not prepared for any of it. The average person is watching football games, they're going to Dave & Buster's, they're watching Netflix, they're just ignoring the real world. And in the real world, you can ignore it all you want, you can hope all you want, but the real world is stronger than any hope, it's bigger than any football game, it's going to have huge repercussions, more than any Netflix show. Big things are about to happen, ladies and gentlemen. We don't know now, how much bigger this war is going to get in the Middle East. You have these agencies now here in America warning of retaliation right here on American soil. So much that you've got to be preparing for. It's not just preparing financially, but you've got to be preparing to survive, serious things. That if your power went off, if your ATM went down, if the grid in your city went down, if the water system in your city went down, are you prepared to deal with this for a week, 2 weeks, or 4 weeks? Most people are not. So as I feel a little bit better now, it's going to be nice to get back to training, back to the gym, back to the range, and all those things that are so vitally important. Health is so important. Just being down for a couple days with a sinus infection, it just makes you really think about how important your health is. That you just don't function as well when you're not feeling as good, right? Health is just so important, and we want to optimize our health, eating as well as we can, working out as much as we can, getting in the best physical shape that we can. We want to optimize ourselves financially, spiritually, and physically, ladies and gentlemen, right now. We want to get as much production out of our body, out of our mind, out of our spirit as we can. So as I leave you today, so much happening. It's good to be back, but it was nice to take a break. I will tell you, I was a little bit drained. I needed to take a couple days off. Everything that's happening, just mentally, you've got to take a break. And just sitting back, watching this stuff play out, you know, it really, really makes you think, where are we going to be a year from now, 6 months from now? And how many people have no idea what's about to happen? I thank God for people like you that are preparing and who know the truth and who are watching reality and accepting reality for what it is. There's no way you can prepare for this if you're in a bubble and you cannot accept reality. The only way you can prepare for this is knowing that there's a problem and accepting the reality of what's going on. I'm going to leave it there today. Again, I apologize about the voice. I know it's a bit raspy. It should be better in a day or two. But keep up the good work. Keep preparing. Do not get complacent. And I look forward to seeing you very, very soon.